Trump is confirmed to be breaking up with Elon Musk in the month of June, right? This is crazy, seeing as how they publicly have always shown to be big fans of one another, but they has now taken a big turn. Elon Musk is saying how Trump is in the Epstein files and all those crazy stuff that he's been saying online, and Trump is also responded with a bunch of other things talking about Musk. So this kind of just shows that we might be in route for a rocky, dramatic movement towards the second half of the year, seeing as how we are in the second week of June right now. So let's see how this will impact the markets. But jokes aside, right, coming back into the charts right here, we have NFP report coming in stronger than forecasted at 139k compared to the forecast of 126k, although we are still beneath the previous reporting. That kind of shows that we are in a downtrend for the past 3 months. We are slowly coming lower, but essentially we need some time to kind of figure out why this is happening and how that will impact the markets coming up within the year. Hey guys, what's up? I'm Hitori. You may also know me as Brian. I know that last week I did say that I have my camera on. I thought I did, but apparently I didn't. But this is probably the first time now I've confirmed my camera is on. So this is the first time you will probably see me on camera in these videos, right? So let's just get straight into the outlook. Yeah, we are at episode 48. So 2 more episodes shy of the 50 mark. Can't wait to get there, but let's get straight into the video. So right here we have the S&P 500, right? And then we kind of did break out of this consolidation zone with this strong bullish candle close, right? So this is pretty much because I'd say because of the market open, right? NFP really just left us a flat bottom open with little to no wick, and this confidence is probably because of the NFP report. If I had to give a reason why, despite the fears of tariffs potentially triggering a recession, the data does suggest a stable economy, right, which supports the bullish trend. Okay, you're looking at sentiment surveys all around, and they are, however, persistent on a bearish sentiment, right? We see many traders being neutral or even short bias, right? This disconnect does suggest room for further upside, which could potentially push the S&P 5 higher into the 6.1k mark if trade deals do materialize favorably, right? Looking at the Russell futures as well, let me just remove that. Taking a look at the Russell futures as well, it also looks pretty strong, with price action confirming a bullish candle close above the 200 EMA, right? So at this point in time, the S&P 500, just go back. Sometimes the charts, they do bug themselves out. So S&P 500, I don't think there's anything stopping us in this regional price action, right? For us reaching 6.1k. Unfortunately, we are quite a ways above the 200 EMA, as well as this support around the 5.7k mark. So you might have to go down to like the 4-hour chart to find your nearby areas of support drawn out by the AutoUFOs in form of unfilled orders, right? So you could expect price in the week to at least thread higher, come back, pull back into the 20 EMA or this support, and see a bounce higher, because on the daily at least, there's nothing stopping us from transversing higher into the 6.1k mark. Okay, so that is the S&P 500. Let's take a look at the Dow Jones real quick. Oh, that's not the Dow Jones, haha. Okay, going to the daily chart, same thing, but S&P is a bit clearer in the direction, right? We are still pretty much ranging within here, while the S&P did close higher above that range. We are holding up of the 200 EMA though, so that's nice, but I would like a strong break of this area right here before continuing a break and retest higher. We are seeing some potential traffic that could cause roadblocks within this region, so it's a lot less cleaner than the S&P 500, right? taking a look at the NASDAQ, we are technically trending really high on the NASDAQ. I don't use trend lines, but this is just to showcase that we are in an upward channel, and we have actually reached the region of potential all-time highs right here, around the 22k mark. The S&P 500 hasn't reached it, while the NASDAQ has reached it. So technically, based on just price action alone, we could expect the S&P 500 to continue rising higher comparatively to the NASDAQ or the Dow at this moment in time, right? Going back to the Russell, it is also likely to maintain upwards momentum unless tariff concerns they do resurface. At the moment though, we are kind of trapped within this dead zone. We have this area of resistance as well as the 200 EMA. So I would like for price to push and close above this level, or maybe just do a break and retest of the 200 EMA. That's also fine, but might be an early signal to get into longs. So I would probably like a break off the 2.1k level before doing a pullback and then a continuation higher, right? That's what I'm going to see from the Russell right here. Okay, so taking a look at the DXY. So right here at the dollar index, we did see it kind of struggle to hold last week, even though it did kind of do a slight bounce after the NFP report last week. Looking at the econ data though, it does paint a mixed picture. While NFP did beat expectations, if we look at previous reports, ADP numbers, jobless claims, and PMIs, they were kind of disappointing, which contributed to a potential muted gains for NFP, even though we did close kind of bullish, but it wasn't a really strong bullish candle close, right? If you look at the candle itself, it is strong in terms of its body to wick ratio, but in terms of the overall picture, it isn't really too much. My cat here wants to go out. Let me just bring him to the camera right here. You haven't seen this cat before. It's Show You. Say hi, Show You. I have two cats. It's one of them. Show You, say hi. He's tripping. Okay, let me just put him on my bed. All right, so okay, crazy. So yeah, where was I? Oh yeah, comparing this to the rest of the large bullish candles like this or this, it isn't really that strong relatively, potentially because the sentiment is still pretty bearish until we see ADP reports, PMI start to look strong for the USD. Just one good NFP report isn't exactly enough to bring bullishness into the market straight off the bat, right? And also we are seeing the US dollar underperforming actually compared to things like the pound right here. We are trending higher on the pound, same thing as the euro. We are also trading higher. This is my drawing from last week. I'll just delete that. Trading higher. So it is technically stuck in a rut, right? The DXY is stuck in a rut. We're seeing other currencies show strength. Even AUD USD is also showing strength, right? Even though we're chopping in a chop fest, we are showing an upward channel, right? So with this in mind, okay, the bug is here. The bug is here. Let me just go back. Okay, so with this in mind, you could expect further downside in the US dollar unless we have CPI reports this week coming up, right? So unless CPI reports and PPI reports, as well as the next round of jobless claims, unless these things have a big surprise to the upside, I would say that pairs against the dollar, like pound dollar, euro dollar, right, I would say they would be primed for longs, right? So the dollar index waiting, kind of stuck in the middle of nowhere right now. So I would like either a retest of this low or even a break of this low coming down into supports at 97. We could see price travel higher from there if we do see anything at all. It could be just a very short-term pullback before a continued run to the downside. But if we do trade higher, my next area of resistance is at this 101 to 100 area of resistance, right? We did retest it, right? We haven't really quite claimed this strong area right here. Okay, So waiting for that to happen. Meanwhile, pound dollar is expected to continue higher. Of course, it mirrors what the DXY does, but if the DXY does thread lower, we could also thread higher right here into this area of resistance around 1.37. Of course, a pullback could be good for a better move on site, right? You could even just place a limit order right here, or just cover this low and then target this area of resistance, right? I won't be shorting this area for now, unless it's like a short-term intraday short. That's fine, but I won't be looking for long-term bears off of this idea to take price lower. Okay, same thing for this euro pair right here. We are trading higher, coming up into this area of structure around 1.15. So it is really corrective in nature. In this, it's not like a strong bullish move higher. So we could come down lower to retest on the structure points, getting some liquidity before continuing higher. Of course, if the DXY does move higher for this week, we could see price thread lower into this previous area of support, and then you could get on site with a better RR, targeting this high as your first target, probably, or even this area of resistance at the top there. And your stops could be covering this low at 1.08 or this low at 1.07, right? Depends on what your risk tolerance is and depending on what you want to structure your risk. Okay, so that is it for the currencies. Moving into gold right here. So gold is also still stuck in the middle of nowhere. It is currently in a holding pattern, right? We did see a sell-off in Friday following the NFP report, which is bringing price down closer to this area of support around 3.2k to 3.1k. Of course, strong econ data, including wage growth outpacing inflation at 3.97 versus 3.9% versus 2.3%. It does reduce gold's appeal as a safe haven. So with that in mind, the metal that we're currently looking at right now is likely to stay range bound between probably this range right here, or maybe even this smaller range. Okay, this smaller range right here. So of course, we will probably see some intraday shorts or longs when you're trading within a range, but hey, don't eat that. Don't eat that. It's not for you to eat. Sorry, but we are kind of respecting this downward trend line as well, so that you might bring some caution. We're currently in like a pattern right here. We're making higher lows and lower highs until we kind of do potentially see a breakout around this area, right? But basically, without patterns, right? I'm just waiting for price to reach this area of support before we could see a sustained bounce higher. But there is no fundamental catalyst for that as of now, so we would like to kind of just wait and see what happens, right? Take a look at WTI Crude Oil. We are still holding beneath this level. It does look primed for a breakout. Friday did see a strong close above, but at the same time, it hasn't really gotten any confirmation just yet. I would like to see some. If we can hold this level, we are primed to go higher, right? But I wouldn't want to long off of the daily chart off of just this level in itself, right? I would want to see price hold it, and now it's gone, but hold it and then push higher, right? Okay, so that is it for commodities. Let's take a look at the treasury use, right? The 10-year, the 10-year bonds right here. So we did see a good retest of the 200 EMA, and we did see a push higher on Friday, which is what we saw when investors sold bonds in favor of equities, right? This is reflecting confidence in the US economy post NFP. Of course, this shift did pressure gold and what we saw just now and other safe haven assets, but we could expect from this reaction we could form a swing low right here. We're testing this EMA, and we can expect yields to remain elevated if econ data does continue to support growth in the US economy, which is going to potentially cap upside in bonds and also further supporting equities, right? So as of now, if we hold above this level, We could go down to the 4-hour, maybe there's some support. Yep, we could see a pullback down to the 200 EMA, or maybe even this area of support right here. See a bounce higher to cap off of this movement higher into this daily resistance, but that's a bit far-fetched. I'd say just these highs would be nice. This one here, 4.62%. This one here, pretty equal in its distance, so that could be your first target if you're looking for any intra-week longs or even long-term longs. That could be your first partial, if any, right? So yeah, that's pretty much it for this week. Don't want to waste too much time because I did do this a bit late. This is already market open, so yeah, I'm a bit late on this week's outlook. I was too busy for the weekend, couldn't manage to get one out, but well, we move on and we move forward, right? So definitely take a look at the Russell this week. Currencies, you know, dollars expecting to slide lower with against other currencies, so that already kind of primes you up for the week. So yeah, all right, that's pretty much it for this week. Are my cats here? Come say hi. Come say bye. Come say bye. Let's go. Bye bye. Tell everyone to trade safe. Show you. Do it. Do it. Do it. All right.